So you may have heard that you should invest in gold, but you're not sure why. Well, inflation is on the rise and will just continue to go on and just go up. This means that the value of your money will continually go down over time. So gold is a great investment against inflation because it holds its value over time. Unlike stocks and bonds, gold is a tangible object that you can hold in your hands. And unlike real estate, gold doesn't have to correlate to any other assets. So let's talk about what inflation is and why you should be worried about it. Well, inflation is at the rate at which the cost of goods and services rises. That means that the value of your money will continue to go down. Now, the cost of living keeps going up, so it's important to invest in something that will hold its value. So, for example, with inflation in 2022 being at 9.1%, a gallon of milk that costs $3.50 today may cost $3.77 next year. But if you're still at that 9.1% in 10 years, that milk will cost you $8.36. So while wages only increase at 3% every single year, you'd just be having to spend more and more money on just your living expenses. So inflation is scary because it can have a huge impact on your standard of living. If you're not careful, it can eat away at your savings and your investments without you even knowing. So you might be thinking that you are saving money by putting your money into a savings account, but in turn, every year you're actually losing money since banks are not giving people a 9.1 interest rate to keep your money into the savings account. So, in the long run, inflation will have a bigger impact on your purchasing power than any other factor. This is why it's important to invest in something that will hold its value over time, just like gold. So let's talk about why gold is a great investment against inflation. Well, gold is a great investment because it holds its value over time. This means that even if the stock market crashes or if real estate prices go down, gold will always still hold its value. And when inflation goes up, the price of gold usually goes up as well. And if the stock market falls, gold prices tend to rise. And this is why gold is a great way to protect your purchasing power and grow your wealth over time and diversify your portfolio. But not only this, but gold is a limited resource on this earth. There's only so much that can be mined from the earth, and that's why it makes it a valuable commodity that will only become more and more rare over time. So not only does it hold its value in terms of inflation, but it's also likely to increase in value as time goes on. And it's been shown throughout history to be one of the most stable investments. This is because gold can't be printed like money, so there's no risk of being devalued by governments printing just more money itself. So let's talk about how you can invest in gold. Well, there are three main ways that you can invest in gold. So the first way you can do is buy gold coins or bars. And these are great options if you want to hold the gold itself. You can either purchase it from a dealer, either local, online, or just even from a collector. Just make sure they are a reputable dealer, as you don't want to be buying something that's fake. And you might want to stay away from pawn shops, as they are usually going to sell gold for more than it's worth or pay per ounce on the current market value, which can be just a fair deal for you. Now, the risk of buying gold coins and bars is that it can be stolen and are just hard to store. So you have to make sure that you keep them in a safe place like a home safe, a safety deposit box, or a bank vault. And you also should get it insured just in case they get lost or stolen. And as precious gold is, liquidating it can be a hassle, as it can be more difficult to receive full market value, as the buyer is also looking for profit. Now, the second way you can invest in gold is to buy shares in a gold mining company. This is going to be more of a speculative investment, but it can be a great way to get exposure to the gold market. And just like stocks, the price of gold mining companies can go up and down depending on the price of gold and the gold mining company's ability to raise gold production over time. And just like any individual stock you invest in, there is a risk of volatility of a company. So make sure you avoid small miners unless you understand the business and you know what you're investing in. Now, the third way you can invest in gold is to buy gold ETFs or mutual funds. Now, gold ETFs are exchange traded funds that invest in gold and track the price of gold every single day. Now, they're a great way to invest in gold without having to actually buy and store gold yourself. And best of all, since they are funds diversified, it won't hurt you too much if a single mining company underperforms. No matter what option you choose, just gold in itself has a proven track record of increasing over time and holding its value during tough economic times. So if you're looking for a safe investment to protect your purchasing power or grow your wealth over time, gold is just a great option. Just make sure that you do your research investing and understand the risks involved.
Yeah, well, I'm investing. I'm like Warren Buffett.
So let's talk about why you should always have some gold in your portfolio. Well, gold in itself is always a great inflation hedge, but it's also a great way to protect your wealth during tough economic times. In fact, many experts recommend having about 10 to 20% of your portfolio invested in gold as a way to protect yourself from volatility in the markets. Well, this is because gold is a tangible asset that you can hold on in your hands, and it's also one of the most easiest ways to trade as it has a low correlation to other assets, making it a great way to protect your portfolio from volatility. But overall, investors like gold because one, the return, the liquidity, and the correlation to the economy. Now, gold usually outperforms bonds and can sometimes outperform stocks in some cases, which is why investors would want to diversify their portfolio to get around that. They also love the liquidity aspect of being able to go to a gold shop and sell their gold and get a fair amount of cash immediately. And finally, with gold, if the economy is bad, the price of gold increases, which is a good way to combat traditional securities. Now, gold is a great investment option for those looking to protect their wealth and purchasing power, but it may not be for you, and that's a-okay. But now you know, hopefully, why people invest in gold, and if you do decide to invest in gold, just make sure that you do your research before investing and understand the risk involved. And with that being said, I hope you thought this was a very informative video. If you did, make sure you like and subscribe. And with that being said, I will see you guys in the next video. Peace.